It is official. The RBA has said stop, no more rate rises. As you can see just down here, the decision follows a cumulative increase in interest rates of 3.5% or percentage points since May last year. So they've said enough's enough. We've seen what we need to see, and the general consensus in the market is it's going to remain steady for a little while. Now, the interesting thing is that this now coincides with the latest property market data. As you can see and below, that the property market has now risen for the first time by 0.6% in March, so last month. Now, it is breaking a 10-month streak of falls. And it's interesting. If you read down below, Tim Lawless basically says, advertised supply has been below average since September last year, with capital listing numbers ending March almost 20% below previous 5-year averages. Now, rental market is extremely tight, so we might have seen people coming out of the rental market to buy property. Now, most of the growth is being seen in Sydney, the top end of the market, and some markets aren't performing that well. Canberra's still a little bit down, Darwin's down, Adelaide's down. And it also saying that some of the regional markets aren't performing the same way that they were before. Where before it was the cities or the little cities that were sort of commutable distance from the major metros that were performing well, where now it is proper regional markets that are seeing a little bit of an uptick in the growth rates. So the question is, could we be looking at a speedy recovery? It looks like we might be. Tim Lawless from CoreLogic is saying the trend at the moment looks like a very steep downturn since the start of interest rates rising, followed by a fairly rapid turnaround. So it looks like we're going to be going into a V-shaped recovery. I agree with these comments. I think that especially since we're now looking at rate cuts into the future, consumer confidence will come back. I don't anticipate we're going to see much of a turnaround with this fixed rate cliff. Variable rates have been high for a while. We're not seeing any mortgage stress in the market. We are seeing the uptick in people buying, and the Sydney market is performing well, as well as the general market. So this could be the start of the next run, and the bottom is behind us. Anyways, keen to hear what you think. Otherwise, happy investing, happy house hunting, and I'll catch you all later.